The Fitch credit rating downgrade on the US also brought weakness to the Philippine markets. Is this a good opportunity to buy? Let's discuss. My name is Den Slim and welcome to another episode of Monday Market Outlook. So last Friday, the inflation numbers came in at 4.7, well within the 4.1 to 4.9 forecast of the BSP. This is good news for the Philippines as inflation has now gone down 1, 2, 3, 4, 5, 6 straight times from 5.4 last month. However, as mentioned last week, there are some indicators that inflation may spike up in the next few months and we may have hit the bottom for July. Now, if we look at Typhoon Egay and Typhoon Falcon, which brought severe devastation not only to our infrastructure but also to our agricultural products, an estimated 1.94 billion damage caused to our rice crops as well as our cornfields could result into inflationary pressures in the coming months. Not only that, Saudi Arabia extends their 1 million barrel per day oil cut, and this may deepen into the future, and even Russia announcing a 300,000 barrels per day export cut in September. Now, if we look at crude oil prices, we can see that it has already breached its resistance level at 82 and is now at 82.59. If we look at the relationship of the WTI crude oil with the inflation rate here in the Philippines, you will see a surprising correlation between the two. Now here, the orange line is the Philippines inflation rate and the chart here is the WTI crude oil chart. Now, as you can see, as crude oil prices go up, there is a lag effect before inflation goes up in the Philippines, and as crude oil prices go down, there's also a delay in inflation going down. And again, same scenario, oil prices go up, after a few months there's a delay for inflation to also go up. Now, if we look at the far end of the chart, we can see here that crude oil has already started a rally here to 82. Now, inflation rate is still down. Will inflation rate now follow crude oil prices rallying up in the next few months? We will see, but it doesn't look good for inflation numbers. We will enjoy the good inflation results while it lasts. And we have to be on the lookout if inflation will indeed worsen in the next few months. A quick look at earnings last week. As we go full steam in our local earnings scene, we have some great numbers coming in for Aboitiz, 79% and a 46% growth year on year. But terrible numbers for RRHI and Wilcon. Balay reopening play plus 68% and 68% growth year on year. Now, some highlights from our banking stocks. BDO profits surged by 47% in the first half. Metrobank also 31% earnings rise in the first half of the year. We also have Ayala Land, which we have been monitoring. Income surging by 41% in the first half despite interest rate headwinds. Meralco, core income up 49% in the first half. Now, sometimes I wonder if Meralco's great earnings may also be an indicator for upcoming inflation. Let's look at the PSEI chart. Last week, the Fitch downgrade also caused a sell-off in the Philippine Stock Exchange as we saw the index fall more than 100 points to settle at our critical support zone, 6,484. But the very next day, the markets had a strong rebound. But on Friday, we have a sell-off here that breached our support level. But if we look at the 5-minute chart, this sell-off here is a mark on close sell-off. You see here the gap. The market was able to sustain itself above our support level before the mark on close sell-off brought the markets more than 100 points down to 6,450. This drawdown is most likely rebalancing related and is really nothing to worry about. On Monday, the market will still be able to open within our critical zone here, somewhere around 6,500. But in the meantime, this could be a good opportunity for us to to buy the dip. Again, as we mentioned, sometimes irrational sell-offs like the Fitch downgrade rating, which has nothing to do with the Philippines, and rebalancing drawdowns could present a good opportunity for us to buy on weakness, especially in the banking sector where it has been quite strong. Now, if you look at opportunities for us to buy on weakness, especially on banking stocks, we would have been well rewarded. Could this be a good opportunity for us to buy on weakness for BDO? Possible. So look at how BDO reacts at this price level, as this presents a convergence or a confluence of support. No, there's a trend line support as well as a horizontal line support. BPI also, I was waiting for BPI actually to touch the trend line again, because last time it touched the trend line here, we actually recommended a swing trade, which worked well for us. Now, the next time it touches this trend line, probably here, a confluence of support could be a good buying opportunity for BPI. Metrobank's chart does not look as good as BDO and BPI. We are in a downtrend. But if you were able to buy on weakness during this time after this confirmed bounce, a higher low, this could have been a 6 to 7% gain for you, which is actually not bad in this kind of market. Now, Aboitiz Power, with its spectacular earnings results, could be a good pick up at these price levels. SCC and DMC is consolidating well along this range. Remember that they usually give their dividends in October, so during the seasonally weak months of August and September, it could be a good idea to slowly accumulate on SCC and DMC in anticipation of the October dividend season. And who knows, they have a lot of cash. They might give a special dividend this October. Now, let's go to JFC. We mentioned that JFC hitting 260 could be a take profit opportunity for us. Now, looking at its price action, we can see that unlike previous hits on 260 where it was instantly met with sell demand, Jollibee is consolidating quite nicely along the 260 level. Is this accumulation or is this distribution? Because if this is accumulation, we could see JFC make a move to break out of this resistance level into its next resistance at 272. Now, at this point, don't chase prices, as the upside for JFC might already be limited. But for those who were holding JFC, this is a good example of why we top slice when our stock hits a take profit zone. We only top slice, we don't sell the whole position, as we still have to be open to the possibility that our stock may actually break out this time, given a few tries. Some of our viewers in the comment section said that they were able to take profit off of their JFC position and buy into Ali, which we also featured in our previous episodes, where we mentioned that the real estate sector may have already bottomed out. Now, congratulations if you entered into Ali, given its spectacular earnings and its current rally right now. If you entered somewhere here, this is already somewhere around a 50% upside for you. So congratulations for those who were able to participate in our Ali trade. Now, going on to the global markets, the discussion last week was around the Fitch downgrade of the US credit rating to AA+ from its AAA rating. This also caused a big drawdown in the S&P 500 down to its support level at 4,500. And of course, that introduced further weakness into the markets, as we saw the S&P 500 break through its support level and settle at 4,480. Now, let's look at historical reactions of the US markets when it was last downgraded in 2011. As you see, the downgrade happened with perfect timing into the seasonally weak months of October and September. Now, after the downgrade in 2011, we saw the market go further down like 5% and then form a base at that level. However, if we look at the 10-year treasury yields, it went up a bit and settled down at that level. But the big winner here, gold, going up after the downgrade. Could we see gold prices going up? And of course, if gold prices go up, our favorite stock, APX, may also see the benefits of it. And as we look into the APX chart, no, it has retraced nicely here at this level. And if we are anticipating a gold rally pretty soon, this could be a good pickup. But again, historical data does not necessarily translate into what will actually happen in the future. So as I always say, be careful with your trades and you have to manage your risk accordingly. If we look at the monthly performance of the S&P 500, we are going to enter the seasonally weak months of August and September. For this year, the ghost month will be from August 16 to September 24. I've heard some forums that since they're not Chinese, they don't believe in the ghost month. But remember that China is a big economy. Of course, we can expect the Chinese markets to settle down a bit during August and September, which will also affect global markets. But again, look, here in January, it is seasonally a weak month for the S&P 500. It's actually the weakest month, no, from 2013 to 2022. But remember, the January for this year was actually a good month for us. Historical data may not necessarily translate into what may actually happen in the future. Now, let's look at some economic numbers that came out last week. We saw some PMI numbers coming out. The manufacturing PMI still in a contraction mode, but the services PMI and the non-manufacturing PMI, while coming in below expectations, is still above 50, which still means that these sectors are still expanding. A quick look at the labor market, ADP non-farm payrolls coming in hotter than expected, 324,000 versus 189,000. And the average hourly earnings coming in hotter than expected with 0.4%. Unemployment rate, 3.6 expected and 3.5, right? So, but non-farm payrolls at least went down to 187,000 versus 200,000. So we're still seeing a very resilient labor market in the US. No? But we have to highlight this, crude oil inventories. We're expecting a negative 1.36 million figure, but we came in at 17 million, negative 17 million, which again, this may experience a surge in oil prices, which again may translate into higher inflation readings in the coming months. A quick look at the unemployment rate. Every time the US unemployment rate hits 3.7, we can see a gradual decrease. Could we see unemployment rate go up again next month and then do another decrease, right? So as we wrap up earnings season with 80% of the S&P 500 companies already reporting their earnings by this time, we are seeing a 68% beat rate. Now, this is a bit slower than the normal average of 70%. But considering the inflation headwinds, could be a good number for the US economy. Now, going to the S&P 500 chart, we can see the Fitch drawdown have its effect and a breakdown of the support level at 6,500. So the next support level here would be at 6,450 and the next would be 6,440. What we have to take note here is that if we turn on the moving averages, we can see that this is the first time, since May, this is the first time that the S&P 500 broke through the 20-day EMA. So far, it has respected the 20-day EMA, and this is the first time it has convincingly broke through that. Now, the next support level here is at the 50-day EMA, which if you look at the 50-day EMA, this may consolidate at this level in the next coming weeks, so we could probably see the S&P 500 consolidate here, again tracking very nicely into the seasonally weak months of August and September. This time of the year is usually a good opportunity for us to buy the dip. We could consider entering into the index ETFs like SPX or the Qs, in anticipation for the seasonally strong months of October, November, and December. For next week, we are looking at more economic numbers, particularly the CPI and the core CPI numbers. The difference between the core CPI and the CPI is that the core CPI numbers excludes volatile items like food and energy prices, while the CPI numbers includes everything. No? Initial jobless claims and the PPI numbers also comes in next week. Now remember that the Fed's decision, the Fed's rate hike decision is based on inflation numbers. So the CPI numbers coming in on Wednesday or Thursday next week may give the markets a better indication of whether there will be another rate hike this September, or this could be the start of a Fed pause. No, a Fed pause could signal good news for the markets. So we'll see. But in the meantime, that's it for this week. I hope you found this episode useful, and if you did, please like this video. Please subscribe to the channel for more updates. And again, good luck on your trades. Manage your risk accordingly, and I'll see you again next week. Bye-bye.